Cashflow Diary Podcast, episode 102.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, and welcome to another episode of the Cashflow Diary Podcast. I am your host, Jay Massey, and guess what? I'm excited. Yeah, I know. Again, I say that a lot, but it's because it's true. See, when you're on this journey, when you're out there looking to build your cash flow, you run into some of the most interesting people, and that's exactly why you're here, is to continually run into interesting people. You know, remember, you're going to be the same today as you are tomorrow, or you're going to be the same tomorrow as you are today, except for one thing, the books you read and the people you'll meet. And we've been doing our best to introduce you to some of the most unique and fantastic individuals that we can find that help you understand not only the tacticals, but also the mental game of building wealth and, most importantly, cash flow. And today's guest is no different. But before we go there, I just want to make sure that everybody knows. Go over to learninvestingnow.com. You've probably noticed it's different, which is great. And if you've never been, now is the time to go, because we've got up there a due diligence checklist that I use for a lot of the apartments, etc. But you could also use it for any type of real estate, not just apartments. And what's most important is that we're going to get a series of information that will help you become a bigger, better, badder investor so that you can start off on the right foot. I'm looking forward to helping you in that way. Remember, go over to learninvestingnow.com. All right. Today's guest is what you could say, and I love this because we're going to have to unpack what this title means. I've never heard it. Maybe you haven't either. She's America's wealth mentor. Now, that's a new term. Now, I know when you hear that, you might think, oh, well, that sounds like a financial advisor. Well, you know what? I have a feeling that she has a different perspective on that, because it's one thing to be a financial advisor. I've been there. I've done that. It's another to be the one in a position to advise people financially. And that's exactly what we're going to talk about and learn from today's guest, Ms. Linda P. Jones. Linda, you there?
Yes, Jay. Great to be with you.
I'm glad that you are here. Thank you for taking the time to invest here. We hope that we can produce a return for you today.
Awesome.
So one of the first things that I always love to ask, because this helps people understand, I look at today's entrepreneurs like yourself as yesterday's superheroes. It's the same thing. You know, we used to look at Wonder Woman and, you know, who else? Space Ace and whoever else I can think of that's a superhero in a comic book, and they put on capes and they saved people and they did the right stuff. I view today's entrepreneurs very similarly. However, before any of those people were superheroes, they had a beginning. They had an origin story. So what I'd love to know, and I'd love for you to share, is who is Linda P. Jones before you were Linda Jones?
Well, I was a curious child who wanted to know how wealth grew. And I grew up in a middle-class home among people in the Seattle area who were very, very wealthy. In fact, I grew up on an island called Mercer Island, and today the co-founder of Microsoft, Paul Allen, lives there. Other billionaires live there, CEOs, professional athletes, some very wealthy people. And we were just middle class. My dad was a Boeing engineer, my mom a homemaker. I'm the youngest of 5 children. But at 10 years old, I found the book on my dad's shelf, Think and Grow Rich, and I read it, and that inspired me. And I wanted to know, how do people become wealthy? And I really couldn't find an answer to that. So I read a lot more books, read a lot about mindset when I was really young. But then I went to college, majored in business, worked in the investment industry in the stock investing business, worked alongside money managers, people that were investing billions of dollars, some of the wealthiest people's money. Still, I couldn't answer the question, why are some people rich and how do you get that way? became a certified financial planner, studied more, and eventually found out by investing on my own.
Oh, well, there you go. If you can't, if you can't get someone to show you, do it. I like it.
Exactly. I mean, we all go through trial and error, and I tried some different real estate investments. This was quite a while back, and they worked out fine, but they weren't making the kinds of returns that I felt would make me wealthy. And the stock market started to do well. And I read a book by William J. O'Neill, who's the founder of Investors Business Daily. And I taught myself how to invest in stocks. And I made my first million when I was 38 and my second at 39.
Oh, there you go. Stocks are good. They can make money too. I love it.
Yeah.
So let me ask you this question then, because you started with a very interesting question. And I'm just going to ask you, based upon your research, why are some rich and how do they get there?
Well, thank you for asking that, because I did feel I found the answer. And I really feel that there were 6 steps that I identified that people followed. So,
Okay.
me to go through those?
Oh, absolutely.
Okay. So the first one was all about creating a wealthy mindset. So I've found that wealthy people think differently about money. They take an interest in it. They go after it. They decide what they want. There were a lot of different components to the mindset piece, but the first was to really get their mind straight and set on what they wanted.
Okay.
The second was to save a nest egg.
Oh.
So you're going to need money to invest, right? So you have to save some money.
Okay.
And the third step was to find a mentor. So either, a book or someone online, someone who does a podcast like you, me, or different people that have done what it is you want to accomplish. It's really important to find someone who's actually done it.
Oh, we'll talk about that in a second, but go ahead with number 4.
Number 4 is invest in a money engine. So in your case, Jay, your money engine is real estate, of course. Mine for my first millions were stocks. And I actually feel that over time, there are cycles that happen that mean that there are better places to invest than others at particular times and moments in history. So following cycles is super important, but investing in a money engine, you have to have that thing that's going to grow your money.
Yep. Excellent.
And then the 5th step is to compound at a high rate. So you've got to compound at a rate high enough that your money's going to grow money, and it's going to catapult you into the, into the wealth that you want. And, obviously in a low interest rate environment like we're in right now, everyone's saying, well, I can't seem to compound very high. And that's true. That's a problem for some people.
Compound. I think they might be thinking, how do I just not lose it? But yeah.
That's true. That's true. But also, leverage can be a really important part of compounding. If you're smart and use leverage wisely, that's been a skillful tool that the wealthy have used for a long time to increase their rates of return.
Indeed.
We can talk more about that. And then the 6th step is to protect your wealth. So not to stay leveraged too long.
Yep.
And to, cover your debt at a particular point where you've had enough and you're wanting to protect what you have, not risk it all.
Nice. Exactly. Very simple. So see, now you need nothing else. We're done with the show. Now you know exactly what to do. But
really, it really answered for me. How does it really happen? And I didn't learn that in my studies. It was really from investing myself that I got to that point.
Got it. And well, what I like about this, again, it's a very simple process. The wealthy mindset, that is by far in my opinion, the place to start. I'm curious to understand how you discovered that was first.
Well, I think it was from reading Think and Grow Rich and then multiple other books. I read every classic book you can think of, The Magic of Thinking Big, Psycho-Cybernetics. I mean, there were a lot of classics from the 50s and 60s and 70s that were just around at the library that I could check out. And they were just incredible books at that time about how much power our brain really has and our mindset and focusing on what it is we want. And, there have been a lot more scientific studies about it nowadays, where you can read about the placebo effect and things like that. But it's so strong and it's so apparent that there's something to it, that I felt a lot of financial experts, particularly, the typical financial advisor, um, wasn't talking about how important mindset is. That was totally left out of the equation when I worked on Wall Street. It was just not, it just didn't exist, right? So
Yeah, no, they just jumped straight to number four.
yeah, exactly.
They jump straight to number four and start talking about the money engine. This I know from personal experience, but please continue, because the mindset, you can have all the other tools, but if the mind ain't right, nothing ain't gonna work. It's just that simple. But
that's right.
I love it. Go ahead.
And we all have, things that we were taught by our parents, which might not be the most helpful mindsets.
Oh no, my parents did everything perfectly. I don't know what you're talking about.
Money doesn't grow on trees. We heard that when we wanted money, right?
Right.
And also when I started working with women, I heard a lot of women tell me they didn't feel worthy and deserving of wealth, and that blew me away. I never had heard that in the financial industry. That was just shocking to me. So there's a lot that people struggle with, and just feeling that it's possible, just getting to that point where people can actually, work on their mind and say, this might be possible for me, that I can actually be wealthy. And to get people to that point, I think is huge.
Indeed. And let me ask you this question, because I know where I stand, but I'm curious for you. Is this something that you attain once and quit? Or is this a continual journey?
As you know, it's a continual journey, and it's something that you're working on constantly, because you overcome the things from childhood or from other things, but there's constant negativity being thrown at us. I know from working with clients that those who fall asleep to a channel like CNN or something that has a lot of negativity about murders and robberies and things like that, that it actually seeps into their subconscious. And I found that it was hard for them to change their mindset until they stopped falling asleep to the news. So there's all these different things around us that are constantly impacting us and getting into our subconscious. And most of this is really at the subconscious level that we're talking about. So it's really not even something that we know, we think, or believe.
What's interesting that you bring up, because when you start talking about the subconscious level, I've spent a lot of time with John Assaraf, and he's always, talking about the brain and the mindset and those types of things, which is great. But there's something I think that you had as an advantage, and I don't know if I wonder how much credit you give to this. I often say that environment trumps will. I can have the greatest willpower on the planet. I can think I want to go in this direction. However, if I am always and constantly surrounded by things or people that are going in the other direction, or don't believe the things that I need them to believe, or that I would like them to believe, that are in concert with where I'm headed, that it makes it more difficult. Not impossible, just more difficult. My question is, the way and the environment in which whom you had access to by virtue of your father and parents, do you think that made a difference in the mindset?
I think it did make a difference. I mean, my parents were always very encouraging and telling me I could accomplish whatever I wanted, which I realize not everyone has parents that do that. But you bring up a really important point about environment. And for anyone who has read any of Dr. Bruce Lipton, have you read any of his work?
I've not. I'm actually writing a list. We were going to talk about it later, of all the books you've already thrown out, and the ones that we haven't, the ones that have information missing, like either book titles or authors. But so yes, but nothing yet.
Well, Dr. Bruce Lipton wrote about environment, and he did a lot of experiments about the importance of environment. And I think that carries over into the wealth space as well. And so I encourage people to try to have an environment that makes them feel a little bit more wealthy. If you're driving a car and the windshield is cracked, there's no way that you're going to, feel like you're wealthy as long as you're constantly reminded you can't pay to repair that windshield, And there's so many things like that we tolerate in our life and put up with that are affecting some of our subconscious beliefs about ourselves. So, you don't have to spend a lot of money, but you can put some just little touches in your home that can make it feel a lot wealthier. You can, upgrade, easily just by going to, TJ Maxx or Marshalls or whatever. You can get some little things that can really spruce up your place. And I think environment is really important, and people need to just think about that.
I think someone's thinking, I just need a maid. That'll be the sprucing. But I hear you completely. However, even on this point, I want to draw a possible distinction. Say, for example, someone is out there listening right now. There is a crack in the windshield, but it's not that they can't afford to. They just chosen not to because they want to defer that for some other goal. What would you say in that situation?
Well, I think that all spending comes down to priorities.
Mm-hmm.
And I understand if they're prioritizing money, but I also think that there's a lot, especially in this financial advice space, there's too much emphasis placed on frugality and doing without. And I like to look at creating extra sources of income. And when I started investing in stocks, I was doing this on the side. I was getting up at 4 a.m, 5 a.m. to do research.
Say that again. Cause I sometimes people don't want to make the commitment. They want dessert, but not dinner.
Yeah.
So what time did you get up?
Yeah. So I was getting up at 4
a.m.
4 a.m.
Perfect.
Yep. I'd get up at 4, sometimes 5, at 4 a.m. I do my stock research, decide what my trades were going to be. And it was extra work. It was an extra job, but that paid off handsomely. And it's something so if someone is prioritizing their money for something else, I get that. But I also think that we need to look for extra income sources, because there are extra sources of income that can come in through either a business or through extra things that we can do, or from lightening our load of things we own, or just all different things we can do. But honestly, if you have a crack in your windshield, it's going to affect how you feel about money and yourself. It really will wreak havoc on your psyche about finance.
I agreed. And, I knew I liked you for a reason. It's like, it's one of those things where I was taught, and I had to learn this because my parents didn't teach me. It was more of not a, I can't afford it, but what could I do to possibly increase the income or decrease an expense to make it work? As opposed to saying, no, I just can't have, don't deserve, won't ever get there. And I love this thinking. This is, I'm so excited right now because these are the things that I wish I knew sooner. And I'm sure hopefully many people wish they knew sooner. So there's the next step though. You talk about saving a nest egg, and I'm going to ask you the question, I'm going to ask, how much is a nest egg?
Well, there's no right answer to that, really, Jay. It's
I know.
It's going to be different for everyone. But the important thing is for people, I am a big proponent of the classic principle of paying yourself first.
Mm-hmm.
I love the, 10% at least into a savings account, and then putting the rest of it into your checking account and spending only from the checking account. The important thing is to be able to save no matter where you are, how little you make, to try and save some.
Indeed.
But yeah, and just get that together, because, you can always start with an exchange traded fund, which is, a group of stocks, a group of stocks that people could invest in. They might be able to partner with someone in real estate, as you teach. They might be able to, do a variety of things. So it doesn't really necessarily matter if they've worked on their mindset. Then the savings part is even less important than the mindset part of that, right? Because you've taught that people can partner without having the money, right?
Indeed. But it only if they have the correct mindset and understand what they are contributing that is still of value to the person or persons or group that actually has the capital. And,
yes.
And until then, you're stuck. So
yes, and they'd better be prepared to work hard and make that investment work, right? So that their investors happy and will want to reinvest with them.
You just used the W word. Now, no one wants to do real estate because now they know it means work. It's all good. It's the truth, though. I have no problem with it. I don't shy away from it. In fact, I try to tell people it's more work than you think. And some people quit at that point, which is great because it means it saved them a lot of frustration, but others are still willing to pursue on. And that's who we are here to serve. So with that being said, when you said find a mentor, you did it you said it in a completely different way than what most people, at least that I run into, think about a mentor, because typically they're thinking things like, oh, I've got to hang out with this person or work for them for free or be at their office and all these other things. But you said books, online, and podcasts. Help me understand how you see that as being a mentor for someone. How can someone interpret that in some way as this person is my mentor and helping me?
So I think it's really important, first of all, to distinguish what a mentor is. And people often ask me, how is a mentor different from a financial advisor? And, we go to financial advisors for advice, but here's the problem. A lot of financial advisors have never achieved financial success. And so you're getting specific lessons from someone who hasn't done what it is you want to do. And they're trying to maybe collect some fees or sell investments to you. They might be a teacher. They might be, a teacher / mentor. But a mentor really has the goal of financial abundance for their mentees, financial literacy. And it's so important that you follow a mentor who's done what it is you want to do, because there's many financial people who have written about finance who never actually achieved financial success except through selling books.
Now, and I'm going to ask you a question. Is there any person you're trying to mention in particular? No, never mind. Don't answer that.
Sure that maybe one or two might have popped into your head.
Yeah. Indeed, I agree. The whole thing. There is nothing more frustrating than not learning from someone from learning from someone who hasn't been there. And having been a financial advisor, this is the only time I'll say things like, it's one of those things where just because I had the license, it felt like I had the power. And I'm like, people, you don't know what it takes or how little it takes really to get that license. And then that's the thing that woke me up to, okay, I don't know what I'm doing, but these people are entrusting lots of money to me and my decisions here. I got to learn, and I got to learn a lot, and it set me on this path. But I find it interesting that you had, sounds like similar experiences.
Yeah, well, it's not uncommon to run across financial advisors that are more like salespeople. That can be very common. Right. And it's, and I read a lot of information about building wealth, what other people say about building wealth. And sometimes I'll read things and I'll say, well, it's obvious that this person has not built wealth, because if they did, they wouldn't be writing what they're writing. Because that's not the way it works, So it's not that I know everything, but I have experienced and made wealth myself, and I can just tell when other people haven't. If that makes sense.
Oh, that's the same thing that happens anytime someone comes to me. I mean, you can take anything you know something well about. You could listen to someone who's asking questions, and that's what I'm listening to. The questions that they ask tell me, so much about what they have or haven't done. And so these are the things that I think you're referring to.
Yeah, I mean, it's like, let's say you were a marathon runner, and
okay,
you could write everything about how to run a marathon. And if I wasn't a marathon runner and I thought I could write about running marathons from, interviewing people that ran marathons or, and you can probably get, a fairly good amount from that, but it's not the same as actually running the marathon yourself, right?
Indeed. It's what we do a web show on Tuesdays where people get to ask me lots of questions, and they're always asking for, Jay, what's today's ninja secret? And those ninja secrets only come because I've been out there in the field. I'm out there all the time, writing offers, making deals, talking to investors, doing what we do. And I find these little shortcuts or new ways of thinking about things that have never been taught from stage, simply because maybe or maybe not, the person hasn't done real estate in a while. And I think I understand exactly what you're saying.
Yeah, that's a great point. Perfect point.
So as we go through this, is there any particular method for finding that mentor? What's the best way to make that happen?
Are you tired of letting good cash flow generating ideas go to waste? Go to CashFlowDiary.com/ready to apply for a complimentary, yes, that means free, one-on-one breakthrough session. Take action now. Go to CashFlowDiary.com/ready. Again, that's CashFlowDiary.com/ready. Before we get back to today's episode of the Cashflow Diary podcast, your host, Jay Massey, has some important insights to share with you.
All right. So here's what we're going to do right now. You're wondering, what are these breakthrough sessions? Why should I go over to that website? Well, at the end of the day, what it is, it's where you and I are going to invest a little bit of time helping you with wherever you're stuck, especially as it relates to raising private capital or, wholesaling or multifamily buildings or just getting started, writing offers, whatever it is where you are stuck. That's the whole point, is to help you break through. So if you want to take advantage of that, we do pick a number of you. Not everybody gets chosen, but it's all based upon the answers that you put on the little questionnaire. And what ends up happening is some of us, we get to talk together. It's kind of cool. And the one other thing I want to make sure that people like you are aware of is, you heard me talk about a second ago, those street tips, those secrets that you can only get from the street, that you would never, ever be able to find inside a course, because they tend to only come out when someone is asking a question. What we do, for those of you who may not know, is that we have a show on Tuesdays where I answer your questions. It's at CashFlowDiary.tv. Again, that's CashFlowDiary.tv. And you can submit your questions ahead of time, or you can submit your questions live. Either way it goes. And we do our best to get those questions answered, or as many as we can that come in. Now, you should know that your question may not be chosen, especially if there are too many, but we will do our best to answer as many as we can. Again, that's at CashFlowDiary.tv. All right, enough of that. Let's get back to Linda.
Well, that's a good question. I think it's, who do you relate to? Who are you drawn to? I mean, people, as you know, some people are going to love real estate and some people are going to say it's not for me.
Indeed.
And so, some people are going to want to learn about something else. So
Yep.
I think it's, who do you relate to? Who do you want to listen to? Who are you drawn to? And, I think I'm a big proponent too of your inner voice and listening to your inner voice. So, when I was drawn to the book, How to Make Money in Stocks, I don't think that was an accident. I think that I was really led there. And it was, I just think that there's a lot of intervention when we ask for it. And we should pay attention to that. I call them taps on the shoulder. You get little voices that tell you what to do, or little hunches or things like that. You should listen to those.
And I like how you said taps on the shoulder, hints, directions of which way to go. That's for sure. They definitely exist. But most, how did you learn to listen to that? Because I've had to learn to listen to that. And I'm just curious as to how you got there.
I can't say that there was any one day that I knew to listen to it, but it's gotten stronger as I've gotten older. And I find that now I journal a lot, and I just pay attention, because I don't believe that there is such a thing as coincidence. I do believe that things are happening for a reason. And so I just pay attention to those things.
Agreed. Totally understood. Now, when it comes to the idea of the money engine, I just want to go on record one more time with saying, yes, I'm well aware that real estate isn't the only one. I just think it's awesome. And that's the whole point, because I want the things that I've learned doing paper assets also help me as a real estate investor. And I would love for you to share with us, some of the things that you've seen that have helped people inside the paper asset arena, that, as it relates to whatever money engine they choose, and how it possibly helps them in other areas as well.
You mean how to choose the right money engine for them?
Sure. Or more importantly, for example, I'll just give an example. From hanging around Andy Tanner, one of the things that I remember a lot is the difference between fundamental and technical analysis. These are things that are always done in paper assets, but understanding how one tracks more of the emotions of the market to help us figure these things out. Well, here's the thing. Inside of real estate, I still have to track trends. And the idea of tracking trends might not occur to the average real estate investor, but because I've had exposure to paper assets, I go, oh, okay, you know what? I probably need to track trends in a very similar fashion as you would if you were stock trading. So I'm just looking for anything else that you might know that's been able to help people either A, choose their money engine, or B, make that money engine work better by expanding beyond just what they're currently set on.
I love that. I love that you said trends, because another way of looking at trends are what I call cycles. And cycles move throughout history in a way that repeats, which is really interesting. And actually, it's something I didn't learn in the financial industry while I was there for a few decades. It was something I learned afterward when I was studying billionaires and I was studying what happened in the financial crisis. And I was learning about cycles and how cycles repeat. And what was interesting to me was this was something that some billionaires had been studying and taking advantage of for a very long time. And yet most of the financial world wasn't aware of it, hadn't studied it, hadn't seen it. But there are billionaires that are very, very wise with cycles. And of course, real estate is very cyclical. So I would just say, if anything, it's following cycles.
Indeed. Now, is there any particular cycle that you've seen where it creates more wealth than others?
Well, there's a cycle that runs about every 8.5 years. And this cycle has really helped people, decide when to be heavier invested and maybe when to not be so heavily invested. And so I think that we are coming up on another cycle right around 2016 that's going to be tough for us again. I think we're going to have another 2008 panic, only worse, because we didn't fix what went wrong in the last panic. We just decided to print money and we didn't really fix the problems. So we actually are going to have to face that again, but in a worse situation, unfortunately.
Well, the question is did we? You say face it again. I say we didn't face it at all, because exactly what you just said. We medicated the issue. We didn't cut out the cancer.
Right. Exactly. That's right.
So
and started printing money, which made it worse.
Right. And then we didn't cut out the cancer. We took medication, then we added some drugs. So more drugs. It's like awesome.
Great way to put it.
I'm going to be better. I don't know about that.
On the respirator right now. Yeah, the economy is tough, and this quantitative easing is the economic term for it, but it really means money printing, running the printing press. And when we did that, we changed history, and we went into a cycle where we're not going to be able to pay that debt back when you're in all those trillions of debt. And it means that, there's going to have to be a shoring up. It's going to affect our currency. There's a whole bunch of stuff that's going to happen. But a lot of billionaires are very aware of this. They're already buying precious metals and other assets, some real estate or farmland and other things. And they're getting out of paper assets and into more tangible assets to protect themselves.
Yep. There's always a way to play the game. You just got to understand what game you're playing and the rules. Indeed. So when it comes to, you said compound at a high rate.
Yes.
Well, this is probably going to set off yet another conversation. But what's high?
Well, so here's the thing. When I started investing, I was getting around a 15% return, and I really wanted to get a higher return than that because I had studied compounding, and I knew that if you could compound at 100% for 7 years, you could be a millionaire starting with only $10,000. Now, that sounds like an outrageous return, but fortunately, you're in a situation where you can use leverage. And if you use leverage wisely, which I only recommend debt for appreciating assets, not depreciating assets, you can increase your rate of return. So, for example, you probably give this example, but I'll give the example of, let's just use a really easy number for me math wise, $100,000 house. So let's say investor A buys $100,000 house and they pay all cash for it.
Sure.
So,
Just as a side note, that's not in California. For everyone listening, keep going though. Keep going.
So, okay, so they buy $100,000 house, pay cash, and the house goes up by $10,000, 10% at the end of the first year. So they made a 10% return. Investor number two buys a $100,000 house, puts $10,000 down, takes a $90,000 mortgage. The house goes up by $10,000. They only put down $10,000. Now their rate of return is 100%.
Got it.
So by using leverage, millionaires and billionaires understand that that's how they increase their rate of return if they use it wisely for appreciating assets.
Indeed. But you still haven't said what's high. What's that number? Where is that minimum wage for the money?
You mean the minimum return?
Well, I call it a minimum wage for your money, but yes, either way, the minimum return. Sure.
Well, I don't have a specific minimum return. I think people want to compound at the highest rate that they can. If you can compound 15, 20, 25%, you're doing great. And again, you're going to have to use leverage in this environment to get to those kinds of rates. But if you can get higher than that, if you can get to the 100%, you're going to build wealth very quickly.
Yes, that's all I'm going to say. And then
What's your number?
Well, mine. Okay, got it. That's one way of putting it. When it comes to, and see, this is where we begin to have a conversation about types of returns, not just the cat. So I break them down. I'm always looking at the difference between my cash on cash return, my return on equity, my total rate of return. But to be on the same footing, I would be in this environment, I would be talking about a cash on cash return. Mm-hmm. So that cash on cash return for me is what I call, it's inflation plus 3%. Where the conversation gets a little hairy is what's the inflation rate? And that's a whole nother story. So, right now for me, that number is on a cash on cash return basis. Yeah, that's going to be nothing less than 15%, but that doesn't include a whole bunch of other things. But yeah, so it's similar numbers. I just break it down. I'd break down more of it because one of the things that you have to do as a real estate investor is manage that equity, over time. And make sure that it's still producing the way that it needs to produce, or do you need to sell and buy and all this other stuff?
Yeah, and Jay, I just want to say that the important part of this whole conversation is that people know what their return is.
Yeah.
That is the essential piece, that if you focus on that is what you really need to do, because I know a very, very wealthy man. He's a billionaire. I don't know him personally, but I know people that have worked for him. And he would always say, I need my 10% return. And that was, after tax return. And he'd say, I need my 10%. And no matter what he was going into, he'd always be focused on, I've got to have that 10%. I'm more inclined with you that 15 plus is what we would want to look at here. But, it's very interesting because wealthy people, they know exactly what their compound rate is. Yeah.
And at the end of the day, depending on the wealth, what do you call it? Money engine, that you're using, it has certain characteristics that, are limiting factors. I mean, it's the same thing as like saying, hey, I want to drive a car 200 miles an hour, but then I go buy a Toyota Corolla. That's just not going to happen. And sometimes we need to reevaluate the tool that we're using to get to our goal and ask ourselves, honestly, does the tool have the horsepower to actually carry us across the finish line? And in most cases, we haven't done that. The people that I work with, they typically haven't done that kind of research or understanding, and that's why they're seeking higher returns or something, in that regard. So there's so much here on that one topic that we could keep going for a very, very long time. But I want to get to what I think is the most important one. because I met a guy a long time ago, in one of long time ago, and he told me, he's like, he said, Jay, making $1 million was easy. Keeping it, that's what was hard. I was like, okay. So I want to talk about strategies for protecting it and how you came to see that protecting it was definitely on the list, because you're one of the few people that I'm aware of outside of myself that even brings that concept up.
Well, it was very interesting. I think being in the financial industry, I saw a lot of people make money and lose money. And you're right, it is easier to make it than to keep it. And what I saw was that people could make the money generally from leveraging. They got into a high compounding rate, but then they stayed leveraged too long. When the economy turned south, they lost everything that they had spent years building. So it really became important to me to talk with people about, the not always keeping your foot on the gas pedal, not always having the gas to the floor, right? The pedal to the metal.
Right.
And to understand that there's a time to maybe take up your foot off the gas pedal and get rid of some of that debt and just protect what you have.
Agreed. And here's the thing that I would say, when she said take the foot off the gas pedal, she didn't say put the foot on the brake. So keep that in mind. And there's a difference between putting your foot on the brake and if you've ever driven a vehicle, you understand you still move forward when you're taking your foot off the gas pedal.
That's
so
right.
Just keep that in mind as you go. What has been your favorite way to protect? Is it just a mindset of not acquiring more? What when you say protect, what is it that you really mean?
Well, I really mean covering the leverage. So not staying fully levered. So paying attention to cycles, understanding that, people get a little bit caught up because we get into a bubble situation. And a bubble happens when sort of everyone sees the same thing happening and they look in the rearview mirror and they go, wow, if I had invested in this thing for the last 10 years, I would have been a gazillionaire. And then they go, so I guess this is the place I should invest for the next 10 years. But the problem with that is that everything moves in cycles. And usually by the time something seems really obvious that that's where you should have been investing, it's about the end of the cycle.
It's a little late.
Yeah, it's a little late. And so people tend to, not see that trees don't grow to the sky.
No.
Don't grow to the sky, and they grow to a certain height, and then the money will move into a new area that has been underwhelmed for, maybe 30 years sometimes, and has been out of favor for 30 years. So they'll move to something that nobody likes, no one's interested in, no one's even paying attention to. And then that will start to develop and move up into, the next bubble. So I just think, watching your investments, understanding cycles, and really understanding that we're going to have good times, we're going to have bad times. And you can't always invest for the good times because it's the wrong strategy in the bad times.
Oh, well said. Well said. The interesting thing about this, whole conversation and just the world of investing for myself is the only investing that I know. We didn't start until 2008. Which some people would say is the wrong time. Others might say it's the perfect time. So I've only known chaos and these proverbial good times that everyone speaks of. What do those look like? I can't wait to find that out.
Well, you actually were really smart to start in 2008. I imagine you have been able to get some really tremendous buys and have some really exceptional returns from being able to purchase. Because I always say that particularly in the foreclosure market, that the money is made when you buy the property, not when you sell the property. So being able to buy it at the right price is the most important thing. And you probably got a heck of a lot of good deals, which is when you made a lot of good money.
And the fun thing is that oftentimes you speak of cycles, and this is so true. And it's very true if you start to think about it. And types of real estate, whereas the residential housing market has its own cycle, which is completely different than the commercial real estate market, which is different than commercial retail, which is anyway. So the fun part is figuring all that stuff out and then knowing what to do. So let me ask you this, because I run into this, and I'm guessing you do when you're working with people. What happens when that person goes, okay, Linda, teach me everything you know. You do your best, and then they still don't move forward or take some necessary physical action to make those things a reality.
Isn't that the most frustrating thing?
That's why I'm having you answer the question this time.
It's a very frustrating thing. And I believe that goes back to mindset. It goes all the way back to step one. And if they are of a mindset where they're afraid to make a mistake, they're afraid to be imperfect, they're afraid to fail, because I believe you fail your way to success. So no one's perfect. We're all going to have some things that don't go right. That doesn't mean your investment went upside down, but maybe one did, or, but you're going to learn from that. And you have to have the right mindset that things aren't going to go perfectly. And, I think there's a lot of perfectionism, and people get stuck and don't even want to start because they're just mired in fear and perfectionism.
Yeah. Wow. Yes. And that's the same thing that I see. I often ask people that I need them to get 6 Fs really, really quickly, especially if they were A students in school, is because they were trained to do things right the first time. And if you couldn't ask for help, and if you didn't do it right the first time, you didn't really get a second chance. And it's like, man, you got to learn to fail fast, fail forward, and fail frequently, so that you can give yourself a shot at being the entrepreneur that I think many of us were born to be, but we just don't see all the time. And I find that very, very interesting. So what would you say has been one of the greatest failure events you've experienced that you've been able to turn into a learning lesson?
Wow. I would say early on, when I was in my 20s, I started a business. And I had no strategy, not really an idea what I wanted to do. I knew I just didn't want to work for corporate anymore. Well, that didn't go over real well. I got so broke that I had to borrow money from my mom for groceries. It was just terrible. And it was depressing, and I felt like such a failure. It was really awful. And it wasn't, it wasn't probably 10 years after that I made my first million. So it wasn't an immediate turnaround, but it did get me back on the right path. And it got me back on these steps where, I started saving an nest egg and finding a mentor and looking at different money engines. And so it got me back on the path, but it was a complete and total failure.
Awesome. Now, is there anything from that time that you take away and go, you know what, this is the reason I had to go through that to be able to be where I am today?
Oh, yeah. I think just to, I think when I got out of college, I got a good job, didn't pay a lot, but I was able to work my way up very quickly to a very, to a 6-figure income. And it was after that I quit and then, got down to nothing, where I had to borrow money from mom. So I think what it taught me was that you don't always have to just go for the job and the income. I mean, there's some truth to, if you're comfortable, it can be a negative for you because you don't want to leave that comfort zone. So for me, I was very comfortable, and then I took a risk and really didn't know what I was doing. My father had passed away. I moved in with my mom, and it was just a time for me that was really hard. But I'm so glad I went through it, because I got to hit rock bottom and just say, I'm never going to be here again, and let that motivate me to do something more and finally go for my goals and achieve them rather than just being comfortable.
Indeed, and for our military out there and those that have ever been heard of the SEAL training, one of the things that they do, especially if they're going to be what they call a frogman, they purposely drown them, let them drown to experience that process, so that they know the bottom. You're like, well, it can't get any worse than this. And then, obviously, don't ask me how they do all that. I just know that they do. And I think there are similar lessons in understanding that, I've been to the bottom and I'm still alive.
Mm-hmm. Exactly. And it's an important point because I think if people have had success in their life and, they've got the house and the nice cars and things like that, of course, nobody wants to give that up or risk that. But you've got to be prepared enough. And that's the beauty of finding a mentor like you that they have to follow because they don't have to fall on their face and make their own mistakes. I mean, they're going to make some mistakes, but they've got someone to teach them. And that's the power of a mentor, right? That's the power of someone taking you by the hand and showing you the way is they can help you avoid making these terrible mistakes.
Indeed, indeed. So let me ask you this. For those who are listening and maybe they're discovering you for the first time as you and I are talking, they've got to know by now that, there's information that you have that they need to know. How can they get more of you?
Well, they can go to my website, LindaP.Jones.com, and I've got 21 days to a wealthy mindset, which they're going to hear from me all the different ways to change those limiting beliefs in their mind and think like a millionaire and change their life. And they also can go to my podcast, which is Be Wealthy and Smart on iTunes and Stitcher and Blackberry.
I like that. Wealthy and smart.
Yeah, Be Wealthy and Smart.
And not just one, not just wealthy, not just smart, but wealthy and smart.
And smart.
This is good. This is good. Excellent. So if you had a moment to talk to that person who's just now getting started, who's wondering, can I do this? They're ready to put on their superhero tights for the first time. What would you say to them?
I would say make a decision. Make a decision and create a powerful vision for yourself and hold that vision.
Nice. Well, I definitely thank you for investing your time here today.
My pleasure, Jay. Thank you so much.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. There were a number of resources that were given in this particular episode. Yes, go over to the website, LindaPJones.com, LindaPJones.com, 21 days to a wealthy mindset. 21 days. That's quick. Go. Sign up. Get the information, make it work for you. But most importantly, understand that this is a process that you're going through. It doesn't happen overnight. In fact, it takes at least 21 days. So keep that in mind as you go out there to go build your cash flow. I look forward to talking to all you guys again soon. Until next time.